mind, in my head, this is where we all came from. The dreams we had, the love we shared, this is what we're waiting for. And in my mind, in my head, this is where we all came from. The dreams we had, the love we shared, this is what we're waiting for. In my mind, in my head, this is where we all come. In my mind, in my head, this is where we all come. In my mind, in my head, this is where we all came from. The dreams we had, the love we shared, this is what we're waiting for.
What is going on, YouTube? It's Brendan from Market Makers. Guys, this is our final show of the year. Next week, we're going to take a much-deserved week off, visit with friends and family. I got family and friends coming in from out of town, but we will be releasing our Black Rhino video next week, which is about the incoming recession. So watch that video. We'll put that out there for you. But I just want to say in the beginning, because I'll probably forget at the end, I hope everybody has a Merry Christmas, a happy holiday, a safe New Year. Don't drink too much. You guys know who you are in the comments. And I hope everybody's enjoyed trading these markets with us this year. Guys, I feel really blessed to have been able to share a couple of really nice trade ideas with you. The Bitcoin long that went 40%, the S&P short, all in the last couple of months that fell 300 bars. And of course, all the myriad of trading ideas in our room. If you guys want to check out our Discord, it is free to join. You can check out our sponsors, SimpleFX or BingX. Download the app. Message Lee in the Telegram, and that link will be pinned in the YouTube comments. The Telegram link, message Lee, and come check out the room, guys. It's free for a month. We have our TA, a fantastic community, trading ideas, as well as live streams there for everybody to enjoy so we can start the new year with a bang. Let's talk about the markets real quick. So we had a flash sell. Hence the title of the video. We had a flash sale yesterday. We had VIX options expiration, which is exactly what I think happened. You saw the VIX spike up. The markets take a sharp turn down. We're going to look at the markets, guys. We're going to go over all the charts since this is the last video for whatever, a week or so. So we're going to look at all the charts and give you the targets of where the resistance levels are, where that harmonic expansion, remember Fibonacci is a measure of proportionality, where that harmonic expansion is for the upside targets. And tomorrow is a big day you guys should pay attention to. Everybody's busy right now buying those last second Christmas gifts, but tomorrow's a big day because we have PCE coming out tomorrow, the Fed's preferred inflation metric. That comes out, and if that comes out in the morning at 8:30 a.m. Eastern time, watch the market's reaction. The market's expecting it to be under 3%. So if it comes in at 2.8, 2.9, you're going to see the rally pop up a little bit more. If it comes in over 3%, you could see some more selling. We're going to go over our Fibonacci pivots, right? We're going to go over our Fibonacci pivots as well. And let's go ahead and jump into all the charts. Guys, leave me your comments at the end of the video because I reply to all of them. Don't forget to like and subscribe. And thank you again so much for the growth of the channel since we started this 2 years ago. Really do appreciate it. Lee, let's start the show. All right, guys, as we await the much anticipated PCE data tomorrow about what inflation is doing, I just want to remind you of trueflation.com. The best way to measure inflation is aggregate inflation because I watched Bloomberg this morning and they're totally befuddled. They're still befuddled. Why is President Biden polling so poorly, especially on the economy, when they see the resilient economy and everything going so well? So well, in fact, that the Fed's going to have to look at cutting rates. They added a rate cut to next year. Well, let me explain to you why. Look at the aggregate inflation. You've lost 23% of your purchasing power due to inflation. Okay, 23%. This is what they don't understand because the talking heads on TV only focus on that PCE number, the CPI number. We all know inflation is not 3%, it's not 4%. Everybody that watches this channel goes to the market, goes grocery shopping. Here in Florida, Publix is really big. Everything is super expensive. I saw a statistic put out by the Farmers Association or some organization like that about Thanksgiving dinner cost the average family this year 46% more than 2 years ago. And this is what bites, guys. This is what bites on the prices of everything. And just a reminder, when they talk about inflation coming down, inflation is not coming down at all. The rate of inflation, in other words, the rate of change on the upward trajectory, is slowing. That's all that's happening. So, in other words, there's no motivation to knock out the high prices because what the Fed is targeting is a 2% year over year inflation, meaning 2% on top of the 9% we got last year, on top of the whatever it was in 2021, 5%, 6%. So, this is why you have an aggregate number on inflation. And the only way you're going to get this number down, by the way, is when the recession comes because recessions are deflationary. So just understand that. They also play games with the CPI. For instance, there used to be a metric in there. Part of an inflation metric was health insurance premiums. Well, guess what? Health insurance keeps flying up. We all know that here in the US, we pay for our health insurance. So they substituted health insurance premiums for health insurance companies' profits. They substituted it, and it also helps lower the inflation because at the end of the day, the Fed is very political. Let's go forward. Let's look at the 10-year yield. So the key thing I keep reminding you guys about, we're going to cover this in the Black Rhino recession as well when we put that video out next week. Definitely look for that video and let me know if you guys like those types of, I'm not going to call it investigative reporting, but yeah, I call it a market maker special report. So October 23rd, 2023. We made our cycle high in the 10-year. And again, this is important because this follows a pattern. Okay. So we made our cycle high in October 23rd, 2023. Now, when we made a cycle high in .com, it took 9 weeks after the 10-year started to crater like it is now. It took 9 weeks and then the market followed it down. Okay. And then in the GFC, it took 17 weeks. So we make our cycle high in the GFC, which was 5.2%, just like now. 17 weeks later, the market followed the 10-year yield down. Okay. So this is an important concept to understand because right now it has been, let's look at this on weekly. We can get our bar count here. Date range. Right now we are on the 8th week. Okay, so we're on the 8th week right now. So 9 weeks in .com, 17 weeks in GFC. Just something to keep in the back of your head. Also in GFC, after we made our first spike, we came back up, right? This is why when I played that Felix Zulauf clip, if any of you watch his actual podcast, he said we may see another spike on the 10-year. What he's looking at is this, guys. He's looking at this right here, okay? So this is 2006 over here, your first spike to 5.23, almost the exact same number we got to this time. And then your second spike to 5.19. And of course, as the 10-year fell for the final time, that's when you had the market fall. This light gray area is the recession, which started in December of 2007, which the government didn't tell you until 1 year later in December. By the way, we're in a recession. Oops. Forgot to tell you. It takes them that long to do it. So if you're waiting for the government to tell you when you're in a recession, you're already going to miss all the price drops, the selling opportunities, the buying opportunities, the trading opportunities. But that's why we are here, guys. So let's go ahead and look at the DXY really quickly as well. DXY is still showing a lot of weakness. We're trying to hold the 707 here at 101 spot 855. And as you can see, it's just been a stair step leveling down here on the DXY. So we'll see what happens here. This is a very low volume period in the marketplace, guys. You're not going to see the DXY really have any type of move up unless you really start seeing a sell-off. And we're going to look at those charts to see how those are playing out. Let's go ahead and look at the S&P. As you guys know, looking at our market geometry here, market symmetry, the equidistant wave moves up here in the S&P. I have my harmonic target for expansion here at 49.22, going up to 49.79. So again, 49.22 to 5,000 for the ultimate target. That is where, if we start building a top up in that range, that is where I expect to be taking a nice short personally. If we get price comes up, maybe makes a 3-wave pattern, 5-wave pattern. You see it over and over again here in the charts. That's where I'm going to be looking for a big trade. In the meantime, you're getting these little retracements up and down, but this has been a parabolic run, guys, a parabolic run up. It looks like we're going to finish this with the 8th week up, again, Fibonacci count. So we're going to look at this on our next S&P chart, the 55-day pivot. So a couple interesting things, Fibonacci pivots, right? So you're looking for a turn. So this is a method I learned from Robert Fisher in the 1990s. But the 55-day pivot here, it says it's today, right? TradingView, looking at this, doesn't count the day you start from. So the actual, if you count the day you start from, the 55th day, interesting enough, was yesterday when we had the flash sell. Again, VIX options expiration, we had that flash sell down, big moves down in all the markets. So this is just another way to look at it here, but we are on the pivot day as well here for the 55th day. So right now we're trying to rebound a little bit. 47.47, we're at 47.40. 47.47 is the 1272 key fib here. Let me take some of this off so I can show you guys, because I know some people are going to ask. We're above my market makers Bollinger Band here, guys. I have mine set to harmonic proportions, the 1618, not 2 standard deviations, for those of you that lay it out and say mine looks different. Well, that's why mine's set to the 1618. You can see we got above it, and now we're trying to stay above it and push back up. I think you'll see another push up, obviously, with a low PCE tomorrow if it comes in low. And obviously the converse of that, if it comes in higher than expected, above 3%, you're going to see the market really start to fall down. Where would it fall down to? Let me take the market makers Bollinger Band off. Guys, by the way, all of our indicators are free. We don't charge you for these at all. When you join for free, you get all of our indicators for free. So it's just an extra Christmas perk, if you will. If you find any of them useful to help you trade, I do. That's why you see me use them all the time, specifically our custom MFI, then definitely consider joining just to get those. And you get to keep them for life. So 1272, 47.47. Let me show you where I'm laying out this fib, just to remind you guys, since we're not going to have another TA video out for a week. I'm going to the correction high, okay? That's Thursday, 27th of July, down to the correction low. And I'm looking at harmonic expansion, which is the 1618, 49.22. I'm looking at the 1.732, just above that as well, which is the square root of 3. Okay, so that's what I'm looking at as these two levels here for key resistance, assuming we still get this melting up. Now, you remember Felix Zulauf, myself included, I was expecting turbulence. I was expecting a retracement. We got a retracement, but again, just like down here, not much of a retracement, right? So when I shorted at 45.84 over here a couple weeks ago, got a 40-point drop. That's all we got off that short, right? So looking at this, this was a much nicer drop, but you can see you're trying to wave back up, right? So are we going to have a deeper retracement, and where would it go? 46.09, guys. It would come back to 46.09. This is also your pivot support here for your pivot high right here, your accumulation range. That's what the deeper retracement would be, which is still not very deep, but that was a deeper retracement. If we get a sell-off tomorrow at the PCE, then you want to look for some type of basing structure to get our W pattern to project back up, because I do think you're going to get up here. The NASDAQ put in a new all-time high. The Dow put in a new all-time high. Bitcoin did 2 all-time highs. The Paris market did multiple all-time highs. The DAX, the German market, did multiple all-time highs. I don't think the S&P is not going to take out its all-time high, which is at 48.20. So I think you're going to come up to harmonic expansion at 49.22. This could happen in January. We'll see. We'll obviously be back here in the YouTube talking about it, but that's the move I'd be looking for on a deeper retracement. Be looking for this pull down to 4,600 with a hot CPI or PCE, I should say. But in reality, you could just end up coming back up, making some type of pullback and then just grinding your way up here to this target. Okay. So be well aware of that kill box zone, 4922 to 5,000, and watch for a deeper retracement, whether it's triggered by the PCE or something else. And I'd be looking for key support at 4,600. If we start putting in a basing structure, a W pattern down there at 4,600, that's where I'd be looking to potentially long as well to ride this back up a few hundred points to my harmonic target. Let's go ahead and look at this on the MFI really quick. MFI is still in bullish territory. It just ticked down here. You're still in the well above the median line. You do have bearish divergence. For those of you that understand divergence concepts, it's the same in the RSI as it is in the MFI. The MFI is a volume weighted RSI, but you have lower highs in the MFI, and clearly you can see here on the chart, if you go from here, you have higher highs in price. Okay, so you have bearish divergence. Again, this isn't anything unique. Anybody that's paying attention to any TE, watching anybody that has any type of salt at all in the markets, they understand most indicators are showing that you're overbought, right? So this retracement makes sense. It's very shallow. It was a nice move down. Where'd it get to? 47.87 to 4,700. And it's all happened in 2 hours, guys. So you had a move almost up to 4,800, and then you had a sell-off of 87 points, right? In a couple hour period. Remember, price falls 3 to 5 times faster than price rises. That's the nature of the market. This is how you get those Minsky moments, because when the recession fear, the panic actually kicks in, or when the market's fully tapped out and the big players come into the market and they sell into strength, just like Warren Buffett's been doing all this past quarter, sold 13 billion with a B in stocks. He's sitting on a record $160 billion. Why is Warren Buffett sitting on $160 billion? Is it because he wants to miss the generational bull market next year? No, it's because Warren Buffett knows key principle in investing is you sell into strength and you buy weakness. So we're going to have our strong retracement next year, but first we have to get up to this level. And then, guys, what I think is going to happen, it's an election year, right? Biden's up for re-election. He's behind in the polls. You have to consider all the factors. We're going to get this strong retracement. The market will take out its low. I have that target of 3,200 for the S&P, because the S&P has never put in its market bottom, not once in history, prior to a recession. The leading economic indicators tell you you're getting a recession, 100% accuracy. Yield curve inversion of 100%. 100% of the time has led to a recession. So that recession will come, prices will fall. You'll see guys like Buffett buying, and then you'll see people on TV and YouTube saying, wow, this is why he's the GOAT. He saw this, but JP Morgan, Bank of America, Wall Street, none of them have a recession prediction. The Fed doesn't have a recession prediction. Guess what other time period? None of them had a recession prediction. If you guessed the GFC, you guessed correctly. The Fed, Ben Bernanke, Wall Street, nobody had a recession prediction until Bear Stearns or Lehman failed and the spring equinox of 2008. That's when the recession predictions came in, but the actual recession, according to the government, started in Q4 of 2007. That's my point. Everybody's going to be late, and when everybody's late, they all run to the door at the same time, and you have a fat person standing in the doorway with a fire in the building, and everybody tries to pile out. That's why prices move 3 to 5 times faster. Man, that was a long, I was just trying to get to the 3 to 5 times faster part. Sorry, guys, got a little bit carried away. It's been an exciting year so far. So let's look at the Russell. Russell got up to our key resistance area right up here. The 150, let me move this away. So we had the 55-day pivot again on the Russell kick in yesterday. Look at that, 55 days. Actually, this should be moved over. See, this is the thing. On TradingView, you don't get the single bar count. So if you put this on one bar, it says 0 bars. You don't get the next bar until you go out a bar, but it's actually 2 bars. Just something to keep in mind when you guys are using the TradingView date range. Do you want to count the day that you're on? If you do, you got to start from the day before, because now it's 55 days today, right? Winter solstice, right? Today it's 55 days. But if you wanted to count the origin date of the actual low for the trend, then you got to go back in one other bar, and 55 days was yesterday, and you caught the drop in every single market. I would say 24-hour band-aid when you're looking at TradingView as far as looking for Fibonacci pivots. Your 5, 8s, 13, 21, 34, 55, 89, 144, 233 going on, right? You look at that in days, you can look at that in weeks, months, whatever. So that's what you're looking at here. So the Russell has this move up, but let's go ahead and look at the Russell. Let's do a Fibonacci on the Russell. We were talking about this W pattern. For those of you that aren't aware, I trade W's and M's, right? Our Ponzi pattern. So we were talking about this W pattern. We had an excellent, based on this Fibonacci ratio, the 1618. We had this excellent hit here, 1830. Price fell down all the way below 1760. So price fell down from 1830 to nice, almost $200 move. And then you had price chopping sideways and expand it. And because we expand it, I want to take a new pull. And then I'm going to show you something else as well. If we go and look at our W here and come up here, we need a 2618. Where is my 2618? There we go. Look at that. 2618 harmonic expansion from 1618, 2042. Where did price get to? It got to 2046. Okay. And again, this is our W pattern. And guys, I'm going to have a whole education system coming out. It's going to be part of the excitement of next year. I'll be releasing that some point early Q1 so you guys can understand all of this stuff as well. But 2618, 2042 is up here. And also when we pull down on the Russell, if we go out here and just pull down from the all-time high, we got to go way back. The Russell's been stuck in this range for like 18 months, right? So we go way back here, all the way up here. All-time high. Where's that market low? This is in the way. Market low. We got, let me get rid of this fib so we can see this. We got right up on top of the 486. So basically your 50% retracement, right? You got to your 50% retracement right here, right on the pivot, and then you dumped. And now you're just chopping around at 2008 is your price. So 50% retracement at the peak resistance of the Russell, the same area it's been in for 18 months. Again, this is a kill box until you can break out of the kill box, pull back, pivot out, and maybe if we get to that 4922 to 5,000 on the S&P, maybe we can get the Russell up to the 618, which would be 2146. So we'll see what happens in this zone because we can also easily retrace from this zone, and the Russell retraces hardcore, right? It goes ham. It goes ham when it goes up. It goes ham when it goes down. That's how the Russell likes to play. If we look at our Bitcoin, guys, here after our big long breakout from the fractal high, and now we're up here. We got up to 44,733. Again, this is a 3-day chart. We're going to look at the daily as well. But on your 3-day chart, you're just chopping. Okay, you're chopping, you made a base, you're holding that 2618 at 41,186, so 41,186. You're holding that 2618 and you're bouncing back up, but this is your key area of resistance up here. And what we're looking for is if this, because you have a 3-wave pattern on a 3-day chart, right? You have this 3-wave pattern. If this rolls over, then it breaks down. If it breaks down below 41,186, it's breaking down further. If this pops up, takes out the fractal, exact same thing I told you guys about this trade for the 40% winner. If it takes out this fractal, my next target is 48,624. And let's go ahead and look at this on the daily time frame. You can see you have a nice little pattern here as well. Let me go ahead and move this. This is your support. We'll remove that. We just went over that. There's your fractal 44,744 here on our BingX chart. And if we look at this as well, if we pull this down, this Fibonacci expansion here, 1618 is back up at 45,330, right? So that's your 1618. What am I looking at? Why am I pulling it that way? Again, I'm just looking at the higher low W pattern here, right? So I'm looking at this harmonic expansion to 45,330. If price comes up, Bitcoin gets a little bit parabolic, hits it, pulls back. You want to stay on top of that fractal, 44,744, same concept as your Livermore pivot, and then break out to the upside, get up to that 48 number, which from this position would be 48,290, right? Right around that 618 from the all-time high. That would be your move up if the markets continue to grind higher, especially with a low PCE. So that's what you want to watch here on Bitcoin. And if we're looking at the MFI, you are still above the median line. You're flat here on the daily time frame. So very flat, but that's good. You're just chopping, right? You're working off some of the overbought condition. You're still overbought, I believe, on the weekly. Yeah, you got overbought on the weekly, but you came back down and you have a strong bullish trend. See that flat? It's flat with a high MFI reading. It's a strong bullish trend. You know, people misuse the RSI MFI all the time. It's not just being overbought or oversold. You can be embedded. And if you're embedded, like you've seen in the markets, you can continue upward trajectory, even though you have a very high reading, an 85 reading on the MFI, 86 reading. So you want to see this work off some of this overbought condition and start to consolidate a little bit. So let's look at the baby Dow. The baby S&P, the Dow, 39 bars, 55 days, once again, would be today. If we pull that back a day and count the bar that we started from, it was yesterday. But, you know, that's neither here nor there. It's just something interesting to know that to pay attention to in future pivot videos. Give yourself a candle differential. So looking at this again, I have my target. I'm basing something I want to show you guys is really interesting. I know not a lot of people trade this, right? We have the winter solstice today. Not a lot of people trade the Dow. I know some of you do. I will, especially when it prints some easy to read patterns like these 5-wave patterns. So when we pull this from our correction high, the same way we did on the S&P, pull this from the correction high down to the correction low, our Fibonacci retracement, we get the 1618 at 37,795, right? I want to show you guys this. It's really interesting. And look where, by the way, where this fell to, the 1414, 37,104, sell off, bounced right off of it. Now you're chopping, right? Are we going to be chopping sideways or start moving back up with a lower PCE? So the 1618 is 37,795. Now, something else that's really interesting here, that's harmonic Fibonacci expansion, right? From your correction high to your correction low. Watch the 1618 again. I'm going to take this from that rally high in August of 2022 down to your low here on October 3rd. Look where the 1618 is, literally within $4, right on top of the other 1618. So in other words, for those of you that don't like geometry, the expansion from this move down and back up, harmonically speaking, Fibonacci speaking, is the same as this move down and back up. Therefore, I would expect 37,799. Let's call it 37,800. So 37,800 to be key resistance again with my square root overspill of 38,449. Looking at this box here for a nice kill box to potentially bounce up to and start making a pattern. Okay. I'm repeating this for you guys because again, this video is your video for the next week. I want you guys to understand this. That's what I'm looking at. But this is amazing that your harmonic expansion is the exact same, pulling it from these two different key points. So watch 37,799, 37,800. If we start chopping sideways and moving back up, okay, watch that because that'll be really, really interesting if it does play out, guys. And to get that information here, you got to read a lot of Fibonacci books over the course of 20 years, which I have done, to find some of these tidbits and start putting things together on charts. I wish I knew then what I know now. I've had to do a lot of reading. But when you look at this, as far as where you could fall to, guys, if this does retrace tomorrow, if we get a hot PCE and this starts falling down, you get a double top. I'm looking at 36,622, but in reality, I'm looking at these pivots from all these previous rallies. So you have your impulse up, right? So my pivot down here would be 36. Right around here, 36,262. So if this breaks down tomorrow, today, whatever, something else happens, a conflict, another war, we don't have enough of those. We need another one, another war, whatever. If this starts breaking down, you want to check your pivot here. If you give up this pivot, guys, you really need to hold that 35,701. But what I anticipate the most likely scenario is PCE comes in pretty close. I don't know how much the market's going to move if it comes in, 1/10 higher. I know it's going to move if it comes in 1/10 lower because that's just euphoric nature. So you're going to be watching this 37,800. Watch your support at 37,104. And if you make this double top, if you get this three-wave pattern, watch 36,622. Let's go ahead and move forward. Actually, let's look at the MFI really quickly. MFI again, you're basically bullishly embedded, right, on the daily time frame. So you're very bullish here, even though you have this wave down. So let's go ahead and move forward. Looking at the NASDAQ, 55 bars on the NASDAQ using the trading view methodology here from the low was actually yesterday. So again, it's just the way it is, guys. You can choose to count the actual day or not count the actual day on the NASDAQ. Worked out beautifully for that pivot. So we had our nice move down here. We went from 16,897 to 16,585. So 300 points in a 2-hour period. The Dow dropped 400 points in a 2-hour period. And now we have our wave back up that's struggling. And let me go ahead and remove this as well. Our pivot date, which again on the NASDAQ was yesterday. And now we have this three-wave pattern forming, right? So the whole key is going to be, do we hold these? Do we start forming yet another shallow accumulation zone, right? That's the whole key right here. Now, looking at the NASDAQ, you are overbought here. You're making a double top shape on the MFI. So that's something to pay attention to. So it really does need to cool off. So I wouldn't be surprised if it just chops around in here. But when you look at this, here's your pivot, guys, your pivot base. Again, hot PCE, you do something like this. You come up. You've already made your shallow double top, your three-wave pattern. If you can't hold 16,448, you fall down. Maybe you get to back test it. And this is the pivot you want to hold, 15,937 right here, right? That's your pivot you want to hold in a bearish scenario. Bullish scenario, guys, where's my target? 17,098. How am I getting that target? Because I know somebody's going to ask. The exact same way on all the indices, the US indices anyways. Correction high, correction low, harmonic expansion, 17,098. For my overspill, the 1.732, square root of 3, 17,312. Okay. So if we do this type of move, low PCE, watch for this type of move up to that 17.1 to 17.3 and see if we start building a topping structure going into Q1. Be very important to watch. All right, let's move forward. Looking at gold. Gold's not doing a whole lot, guys. It's stacking candles side by side. We've covered gold exhaustively, so I'm not going to do that here in this video. We had our parabolic rise up and our kill zone that has been in place for multiple years. Show you that one more time to finish 2023. Kill zone, kill zone, kill zone, and kill zone again. But we are accumulating at a higher level. And if the markets do want to come up, specifically the S&P, to that 49.22, I would not be surprised to see gold make another attempt, another run at this level and come up. And the whole key to gold, guys, hold 2075 on a pullback, pivot back out. You can trade that fractal if we get this move. That's the Livermore pivot in a long Wyckoff trading range, ranging all the way from the low 1600s to 2150. Massive potential accumulation range that you've been in, okay? Let's go ahead and move forward. Let's look at the DAX. DAX has its pivot again today. And so we had our pivot. We had the DAX drop with the U.S. markets. Let's look at this. We got to our harmonic expansion for my European friends and European traders. Where did I get that pull from? Not the same way, not the corrective structure that I used on the American indices, but I'm actually pulling this from this accumulation zone, right? So when I look at this, this was a Wyckoff range. So that's right on top of my 1 fib, that green line. And you can see down here, that was my selling climax, your rebound. I'm pulling a harmonic expansion, right? A harmonic expansion from this massive accumulation range. We got our Wyckoff spring, the move up, and then we have 16.9. And that's the thing when people say, I don't do it that way, it doesn't work. It doesn't matter how you do it. You know what matters is, do you make money off the way that you trade? That's what matters. Do the techniques you use, whether it's Elliott wave, whether it's geometric concepts, whether it's harmonic patterns, whatever your thing is that you're doing, smart money, whatever, do you make money off of it, and how accurate is it? I was able to pull this fib way back October 2022. And it took all the way from October 2022 to December of 2023, over a year to get there, but it got there and it had harmonic expansion at 16.9, and that's where it's struggling. Okay. So when you look at trading, some people like to scalp, some people like to trade a lot. I don't like to trade a lot. I like to swing trade. I like to take trades that I feel like have a high probability of success. And that's how I view the markets. And oftentimes I'll be waiting to take key trades. Okay. So everybody has their own style, but I now know my 16.9 is key resistance. Looking at the DAX chopping around, the German economy is not doing well. Would like to see a retest back here on the DAX. I think you're going to get it, guys. I think you're going to get a retest on the DAX, on the CAC. If the US markets continue to grind higher, I think you're coming back up to 16.9 to 17.1. And you'll come back up in this zone again. And that'll be another, new all-time high for the DAX, by the way. You'll come back up into this zone. You'll make some type of pattern. Again, this will all happen in confluence with the US markets. That's why they dumped with the US markets yesterday. All these markets are intertwined. They all have algorithms buying and selling, the giant blind dumb robot, right? And then they all have day traders as well. And everybody's looking at the same things, listening to the same news and reacting to it. So you want to see if the DAX holds up this level. If we look at this last impulse you'd made here from the DAX, your 382 is 16,588, right? That'd be a shallow retracement. So maybe if you still drift down like this, you can hold 16,588, and then you're going to just be chopping around. And at some point, you want to see if the DAX comes back up to test 16.9 to 17,172. Get a pullback and start making some type of pattern, like a three-wave pattern, right? And again, I think this is going to happen Q1, right? This is going to happen in confluence with the U.S. markets, this specifically the S&P taking out its all-time high. So we'll have more videos prior to that. The DAX, you have the daily MFI coming down to the median line, hence you're drifting down. But, remember, these are oscillators, right? So if this comes down, you want this to reset if you're bullish on the markets, because you want to be able to have that ability to wave up on a larger time frame. So as long as you can hold key support, which for the DAX is 16.5, 16.4, or 16.6, I should say, 16.6 and 16.475. If you can hold that key support range, this is just an area it can accumulate, chop around, and then make its attempt to move back up with the U.S. markets. So be patient. Be patient. None of this is financial advice. I'm just sharing with you how I view the markets. Again, we had our pivot on the Paris market. Looking at the Paris market, let's take this pink line off so we can see. You hit overbought on the MFI, you came back down, and now you're moving back up. Same thing, guys. I pulled the fib the exact same way on the Paris market as I did the DAX, so you guys can just go back and look at that. But the 1618 was 75.75. And again, earlier this year, granted us a fantastic trade. I've mentioned this several times now, but I was really proud of this trade because it took so long to develop. I guess I'm going to show you that. I'll show you where that pull is from, as you can see. Same way as the DAX. This massive Wyckoff accumulation range, harmonic expansion. We broke out of this September 29th, and it took all the way to get up here until, when is that? April 2023, right? So it took a nice chunk of months to come up here and get up here. And when we did, this was a fantastic trade. Had somebody held this trade all the way down, I mean, look at that correction, 850 points. 850 points from that harmonic expansion target of 75.75. So we're back at that harmonic expansion target of 75.75. After this nice rise up, all the markets rose up together. All the equity markets zoomed up together, guys. So this is, the Paris market is a little bit weaker than the DAX. It's not up as much as the DAX on a percentage basis. And when you look at this, let's just zoom in a little bit here so we can see this. This is a daily time frame. I mean, you have what's already forming as a three-wave pattern, right? You can see the supply zones here. You're in that supply zone. I don't know, if the U.S. markets come up, maybe the Paris market doesn't make it above 77.12. You're at 75.70. So as time goes by, I'll look at this on smaller time frames too, guys. But you already have that big move up, wave down, and again, you could end up doing something like this in the Paris market and making your three-wave pattern here, or you could just end up doing this while the other markets go up, and you try to go up and come back down. This is just something you need to watch. You are overbought, but you're holding this range, but you haven't been able to break through like the DAX has, okay? You haven't been able to break through. You're barely above it. This was your previous all-time high. As you can see, if you just throw a trend line here down on this. Hope my European friends appreciate this. I like trading the European markets. That's why we're covering it so much. But you can see, look at this. You haven't had a candle close above that 75.98, right? In the daily time frame. So that's your previous all-time high. So you know that's key resistance. So this zone, getting above it, this is a zone to watch in confluence with the US markets. 77.12 to 75.75, right? That's the zone to watch for the Paris market in the next week or so. We'll see what it does. UK market, I would say it's surprising me, but we've been talking about this grinding uptrend, the FTSE, all the way up, and it's still going up. I'm kind of surprised, to be honest with you, but that it's still going up at this juncture. But again, all the markets are tied together. So you're working your way out of your long Wyckoff accumulation. This is back in June, right? You started this back in June. You have this move up. You're getting supply here in this range. Now, I don't know the UK economics as closely as I do the German economics or the French economics. We do have a lot of Brits in the room, but I know that, you're going to be battling recession like everybody else is next year, and you have inflation problems still, but we have this move up. So if this thing gets a little bit more euphoric, maybe the US markets start moving up on low PCE. Watch 78.32. That's the 1272. Not necessarily watch it to necessarily, that's the final line in the sand. I would watch it for the mere fact that this could be your pullback, right? Because you haven't got a pullback. You've had a lot of failures above 77.10 that cause these nice trades to the downside, right? Move up, or move down, move up, three-wave pattern. You had the three-wave pattern over here as well. Let me get rid of all these lines. You had the three-wave pattern right here. There's your spike up, wave down, wave three, sell off, right? And then you did it again. Spike up, wave down, wave three, sell off. So now you're doing the spike up. But if you can come up to the 1272, 78.36, see if that holds. And the whole key here is going to be holding 77.10. Kind of like with gold. You want to stay on top of the range, be able to build a pattern like a W, nice double bottom. And then that harmonic expansion target would be 79.87 if you could do it. I feel like the zone here is going to be a very strong resistance zone based on the history here. So I'd watch that zone 78.32 to 77.10 on the FTSE. Where are we at in the MFI on the FTSE? I mean, you're not even overbought. So you have price moving. You're not overbought at all. You are in the bullish area, but you're not getting a strong trend up. Meanwhile, price is getting a strong trend up. So you're probably building some divergence here as well. But just something to watch, guys. Let's go ahead and look at the NIC real quick. Japanese market, the JPN 225. Again, long accumulation zone once again. This is the Japanese market. It does this, right? So this is starting off in June of this year, and now we're in December of this year. And prior to that was a multi-year wavy, spirally pattern. The Bank of Japan is basically keeping yield curve control on, keeping their rates basically at 0%. So this is giving hope to the market, but you're just stuck in this zone here. This is a fun market to trade, but let's go ahead and look at this and see where we had here. So we had our nice W pattern. We covered this before. Let me highlight that for you. Had a nice W pattern right here. We got right to the harmonic expansion of the 1618. Look at that beautiful hit. So this is, you're still in the same boat here. You're in this accumulation range. You have to get on top of the range here, pivot out to the upside to have any more upside and start hitting these other levels, right? So you want to come back up, defeat 33 set 777, and then come up and take out 35 141, 35 6. This is just, this could end up being a much larger structure here. Let me take this off. This could end up being a much larger W pattern that you're forming on, like, say, a 3-day chart like this. This could be your pullback and this could be your move up. You see that? And you could end up doing something like this. But we have to see, because this market's very slow moving sometimes, and it's in one of those slow moving periods. It's the end of the year. Let's see what kind of Fibonacci projection we would get from this. If that was the case, you'd be looking at 34,736 if this type of pattern is what's forming here, right? If we get this accumulation to break out to the upside, 34,736 is what I would be looking at on a breakout, taking out that fractal high over here. That would take you up to that level. Maybe you'll see that with the US markets, because again, you have the low, higher low, higher low once again. So you're grinding in a similar way to the UK market. You're grinding up in that general direction. We went over Tesla wave symmetry for those of you that didn't see the last video. Tesla making equidistant moves down here in the current, this is a 3-day chart, guys. 30% move down, 30% move up, 30% move down, 30% move up is right where it is now. I have that 260 target. We got there just yesterday, I believe, at to 259.84, right? But you're chopping around here between 246 and 260. Reason I was showing you this pattern, if you didn't see the last video, let's go ahead and just go over this again for people that this is the only video they see for the rest of the holiday session here. That's drive 1. Drive 2, if we're making a drive 3, it'll be moving most likely the same equidistant move, market symmetry of 30%, right? So you have your wave up, wave down, wave up, wave down. All these moves have been equidistant. That's if the markets don't just start ripping higher of a low PCE. That's the downside. To get more upside, you got to take out 278. Got to take out this fractal right here, take out 278, come up, and then you can take this fractal out as well. That would be your upside trajectory. So you have to watch Tesla because it's in the in-between zone. It doesn't know what to do yet. Everything's going to wait on the PCE. It's extremely low volume. Market's easy to move around. So we'll see. But right now, you're in, I guess, a safe space, you could say, of what Tesla could do. And if we pull this fib here, up here to the current price level, it did start breaking down that 194. You don't want to take the 194 out because if you do, you're looking at 176 and 153. And I believe that 30% down move from current price levels would take you, look at that, 31% right at the 176. So 176, 180 would be your target if you get a 3 drives to a bottom pattern that does form. So if you're MFI real quick, you're in the bullish territory. You can see, look at this. That's what's cool about the MFI. Other indicators do this as well. But you can see when you're looking for W's, a lot of people have a hard time finding M's and W's, right? Double tops, double bottoms. They have a hard time spotting this if you're not used to looking for it. But you use an indicator like the MFI, oftentimes you'll see the exact pattern that I'm talking about, right? You'll see the pattern. It's pretty cool. Let's go ahead and move forward. Let's look at Monster, MicroStrategy. I got a Monster Energy drink sitting next to me. 1618 is at 578, guys. We're still in that zone between 578, 593 due to Bitcoin being in that zone of 43 to 44K. Again, this I think will be a really fun trade for me once we know what Bitcoin's doing. If we get up to 48, make a top, maybe we're going to see MSTR break out even more to the upside. We're already at 585. So this is kind of like, I view MSTR as a proxy to trade Bitcoin. If you want to trade Bitcoin vis-a-vis a stock, obviously the ETF buzz is out there, but if you want to trade it vis-a-vis a stock, I forget how many Bitcoins they own. What is it? 180,000, 200,000? Somebody can correct me in the comments below. But I know it's a lot of Bitcoin, but this moves basically identically with Bitcoin. Of course, you have gaps all the way through here as well, but you could see that expansion. My next level, if we break 593, that next level, well, I guess I could put my other fib on here at the 19. Let's see, 19. Do I even have it on this one? Type that in real quick. 1.902. Get this on here. See what that next level is. 626. So you break 593, 626, 682. That would be the stair step pattern. I don't know exactly where this would hit. Obviously, if Bitcoin went to 48, don't know exactly where that would hit. What would that be? Just under a 10% move. Maybe it comes to 626. Maybe that's even more euphoric for the stock and it comes up higher. We'd have to see. But again, that's what I'm saying. This is what I'm watching because it's going to be a lot of fun to trade, especially considering how parabolically it moves with Bitcoin. And you are up. Just remember, the reason I look at a lot of this stuff, guys, this was $132. $132 in December of 22. And this was as high. Look at this. When Bitcoin hit as high, this was as high as $1,315. Let me repeat that. $1,315. Okay. That's how much that came down. People talk about this like they don't understand how much prices can drop in parabolic FOMO assets, right? So let's just pull this down to that market low. Is that the actual low there? 90% decline, okay? 90% decline, and you're back at 600. So right now you're at a 55% decline from the all-time high, right? You're at a 55% decline. So essentially, just percentage basis, you're looking at this thing, guys. I mean, this thing can come way down, especially if Bitcoin takes out its low in the incoming recession with the S&P taking out its low. Remember, if the S&P comes to 3,200 when the S&P was trading at 3,500, Bitcoin went to 15.5. I had predicted 10.5 back in the last quarter of 2021 for the Bitcoin price in 2022. Got pretty close. Pretty close. Let's move forward. NVIDIA. I want to show you this with the Fibonacci counts. A couple people were asking me. I shared this in our Discord as well. But looking at the Fibonacci counts, right? So just using the TradingView date range, guys. I just want to show examples of how you can use this in confluence with moves. So 21 bars, right? We have 21 bars here. You see this? I use bars and I use calendar days as well. 21 bars, Fibonacci number, gave you the exact bottom. NVIDIA rallied up 8 bars, gave you the exact top. Again, Fibonacci number. NVIDIA sold off 21 days. Okay, not bars now, but 21 days gave you the exact top from this bottom. NVIDIA fell down. 13 bars gave you the exact bottom. Once again, NVIDIA rallied up. So you can see that sequencing over and over again. I have 13 bar count now on NVIDIA on today's bar. So we'll see, what happens here. Obviously, if the markets go up, I anticipate this holding its key support levels. Just want to share that with you. A lot of people are fascinated by like TD9. TD9 was based off of, I can't say it was based off of, but let me just tell you this. Gann wrote about trends reversing 7 to 10 bars. It was a key thing to watch for. And he wrote about that in the early 1900s. Okay, so Tom DeMark came along and he has TD8, TD9. Happens to be within that range of 7 to 10 bars. Packaged it up nicely, came up with a couple rules for it, whatever, sold it to Wall Street. So that's really popular. But people who study candlesticks and study candlestick trading, which is where everybody should start, understand patterns, understand reversals. Fibonacci numbers are all through the market. That's why people trade with Fibonacci's, understanding harmonic expansion proportionality with natural law of trading. So that's just a long rant about that. But if this does go more bearish, guys, you have a massive 3-wave pattern here, which you can see, right? So you have this massive 3-wave pattern, which is a double top. You already had your zone here. You came up for an up thrust. You started your Wyckoff trading range here, up thrust here, sold off. Up thrust here, and you sold off some again. So you want to see if you get this move, right? That's the move you're looking for, is that W pattern in these markets. So if we get this, if this was the low of this move, let's go ahead and do this real quick. So we don't know what the markets will bring. You're looking at 518. So if the market does this move, creates this W right here, you're looking at 518 if the markets rally up. That would be NVIDIA breaking out of its Wyckoff trading range and expanding upwards, okay? 518.76. Moving forward, let's look at Ferrari. We've been talking about this as a long time, guys, and look what it did. Nice double top. You got a higher high here on the second top. Nice double top, but you went all the way 372 all the way to 335, right? And now it's starting to rebound. I think this is going to be one of those rotation stocks. People will be taking profits out of this. It's a car company. Yes, I know it's a fancy car company. I would love to have a Ferrari. I just don't want to pay for it. I don't want to buy it, and I don't want to pay for the repairs of it. Ridiculous. But we had our extended move here from our W pattern, right? Made our M top, W's and M's, guys, made our M top, fell through Fibonacci here. Let's see where this got to actually on a retracement and where it's holding support. Let's get rid of some of these targets. Get rid of this target. We got above the 1618. Get rid of that. And let's just pull a fib retracement on this expansive move out. Bounced right off the 486 to the dollar. 335, you're at 337.84. You see that? Bounced right off the 46. So if you can hold this upward trend, there may be some life left in the Ferrari, some gas left in the tank. Did you like that one, Lee? That's a good one, right? Some gas left in the tank. We'll see if this can move up, if the markets continue to move up. And of course, you can pull fibs down, look at targets, see where this could go. It's just another fun one to trade when we have a turn. We don't have a massive turn yet, guys. When you have a turn, you can look at the high beta stocks. Wanted to cover energy as well because we don't cover it often here. We talk about it often on our Discord, but we don't talk about it often here. Natural gas had this great 5-wave pattern we talked about a few videos ago. Been this extended Wyckoff range now, going back to spring equinox, March 2023, right? So going back to that, we had our parabolic rise up, with the trillions pumped into the economies, the conflict that ended up happening over there in Europe as well. Massive sell-off, went from $10.38 down to $2, right? So where we are now is you're still chopping in this range. Now, again, I've said this several times, but when you approach recessions, energy prices will dip. Energy prices, the commodity super cycle starts, guys, when you have the recession and governments around the world stimulate, right? Increases demand, commodities take off. They sell off as economies slow demand. Now, the media narrative is supply. We just have so much supply now, we don't know what to do with it. We might start bathing in it, right? So there's so much supply. That's what their narrative is. But in reality, and what the 10-year yield is telling you is the economy is weakening, and is weakening across the world. Whether you're looking at the world's second largest economy, China, the third largest individual country economy, which is Germany, which again is the locomotive for the whole Eurozone. You're looking at the UK, you're looking at France. Everybody is slowing down. That's why energy prices are down. Now, we have a good trader friend of mine in the room. He loves to trade nat gas and oil, so he's always doing little trades here. But from a larger perspective, I'd want to see nat gas get on top of $3, $2.97. Get on top of this. It tried to do the pivot up here, ended up making a 5-wave pattern and pivot out to the upside. Or you're doing this, right? If you get this little move here, you could get the pullback and start pulling up from here. So let's just do that for people that do like to trade energy. Just cover this for you really quickly, where this little move could go. A lot of people call nat gas, by the way, the widowmaker. This thing can really move. So $2.666. Uh-oh. Not the best fib to pull before Christmas. $2.666. So you're at 2.509 right now. If you end up making this little baby W here on the daily time frame, right? If you end up making this little pattern, you can watch that range, see if you come up to that. But you're in this trajectory, you're in this trading range. I don't have a pattern here still that I like. And if the economies really do start slowing down, Q1, if the GDPs really do start dropping off like they have in Germany with contraction, if our next GDP print's lower than expected, and then going into Q1, I think you're going to see energy struggle for a while. But there will be a time where you're going to want to be in energy because you're going to have these parabolic moves and recoveries, right? You're going to have these types of moves and recoveries, and that's where you want to be. And now you're in this accumulation base in the large time frame, the daily, bouncing up and down, up and down. So the oil got up to 131. Again, weak demand. Even with the conflict going on, right? Well, not another conflict, but I guess another issue, problem, conflict, I don't know, in the Suez Canal, right? So even with that, you still can't get a lot of movement in oil. We had our breakout. This is also a 5-wave pattern. You guys, you'll see this in energy. Oil, when you trade long enough, you'll notice patterns in certain things. And oil, oftentimes gold, and natural gas like to move in 5-wave patterns, right? They like to do 5-wave patterns. And when you look at this here, you have your wave 1, wave 2, wave 3, wave 4, wave 5. There's your 5-wave pattern, and then there's your sell-off. Boom. Okay. So 5-wave patterns, 3-wave patterns, again, law of 3. 5-wave patterns is harmonic, and you'll see this over and over again. I mean, you probably have it here as well. Let's just look. So you have our wave 1. Look at that. All the way up. Massive spike. Here's your low. Here's your high. Here's your low. And here's your final high for wave 5. Boom. Now what I just showed you just triggered a lot of Elliott wave traders. You can't do that. You can't draw. Why are you using that tool? You can't show them a wave 3 that's not the longest wave. Blah, blah. Guys, that's a trading system under Bob Prechter. Okay, he invented that trading system. That's a trading system you're using with his rules. I'm showing you the natural law way of counting waves, the way that Charles Dow, Wyckoff, Gann would have done it. Okay, so you're using a trading system, but as you can see, again, all comes down to making money. Understanding where to look for trades is going to help you capture trades if you understand how to correctly perform technical analysis in a way that makes you money and profitable. All right. This has been a fun video, guys. I hope you guys enjoyed the videos this year. I love talking to you guys in the comments. I love it when you guys join the room. Really do appreciate all your support. Please continue to check out our sponsors. Again, you can message Lee if you want to join our Discord, want to try out one of our sponsors. He'll reply to you on Telegram, pinned in the comments. Everybody have a fantastic new year. Once again, be safe with your family and friends and have a good time. I will be happy to trade with you guys all again next year. Take care, everybody.